Ladies and gentlemen, good day and welcome to Q4 and FY21 earnings conference call of Salzer Electronics Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Duraiswamy, Joint Managing Director, Salzer Electronics Limited. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and thank you all for joining our earnings call to discuss the audited financial performance for the fourth quarter and the full financial year ended March 31st, 2021. I have with me Mr. Bhaskar Subramaniam, Director Corporate Affairs and Company Secretary, Mr. Murugesh, Assistant Company Secretary, Savli Mangle and Rahul Trivedi from Bridge Investor Relations. We have shared our results update presentation and I hope you all must have received it and gone through the same. Before we discuss the financial performance of the last quarter and the financial year, I would like to share the recent developments and market scenarios with you. As you are all aware, the COVID-19 pandemic wreaked havoc across industries during the initial months of this year, and its impact still continues to be felt as the second wave continues. Even in such trying times, Salzer has shown tremendous resilience and demonstrated decent performance. The domestic dealers and retail market is showing signs of recovery from the COVID levels, which reflects in our switchgear and building segment business where sales are picking up pace. We are hopeful that in the new financial year, demand for these products will continue to gain momentum. Despite the sluggish period, we have been able to surpass the last year's quarterly performance for industrial switchgears, which gives us an upbeat view for the coming year. Moreover, the wires and cables division has seen a very strong demand, which has helped us achieve higher volumes in the quarter as well as the full year. Prices of raw materials such as copper, plastics, steel, and every other material have continued to rise through this quarter. We have been able to pass on the price increase in some of the product lines. However, the margins have been impacted to some extent due to a lag in passing on the price increase to our customers. Our export markets are showing signs of strong recovery with substantial demand coming in. Export revenue has grown this year and even more so in the last quarter. As the industry reopens fully, our growing export market will complement the domestic market to help us grow at a faster rate, giving an optimistic view for the next financial year. The near-term market situation is still a little uncertain given the ongoing second wave of the pandemic and partial lockdowns in various parts of India. But based on the demand we are witnessing as of now, we are optimistic in the medium term based on the indications from various OEMs and customers, and definitely optimistic about profitable growth in the long term. The company is well positioned to cater to any demand from our customers and poised to take up opportunities coming our way. Now, coming to our quarterly and annual financial and business performance, we'll first look at the Q4 FY21 performance. During the fourth quarter, our revenues increased by 43.4% year-on-year to 189.7 crores from 132.3 crore in the previous corresponding period, mainly on account of rise in sales of wire harness products under the industrial switchgear division and a very strong growth in wire and cable division. The EBITDA for the quarter stood at rupees 16.2 crores as compared to rupees 14.3 crores in the corresponding previous period, a year-on-year growth of 13% on account of higher sales. The Q4 FY21 EBITDA margin stood at 8.5%. The profit after tax was at rupees 7 crores in Q4 FY21 as against 9.1 crores in the corresponding previous period, Q4 FY20. Now coming to the full year performance. As a result of the nationwide lockdown, the Q1 FY21 business was impacted, which has affected the revenues, EBITDA and PAT for the full year. Hence, the results may not be directly comparable with the previous corresponding year. For FY21, our revenues stood at rupees 605.6 crore, up by 6.8% year-on-year. Strong demand for the wire harness products, three-phase transformers, wires and cables business altogether has actually offset the impact of COVID-19 in the first quarter. EBITDA for FY21 stood at rupees 61.8 crore compared to 65.2 crore in FY20, a decline of 5.2% mainly due to increase in raw material prices. FY21 EBITDA margins stood at 10.2% as against 11.5% in the previous corresponding period. The reason for the decline is the rise in raw material prices and also higher contribution from the wire and cable business. Profit after tax for FY21 was at rupees 20.7 crore as against 26.4 crore in the previous corresponding period. The main reason for the decline is during the last financial year, there was a substantial deferred tax write-back of rupees 4 crore, which is not there in this year. Moving on to the breakup of revenues as per the business division, the industrial switchgear division contributed 41.3% in this quarter and 41.3% for the full year FY21 as against 45% in the last full year. Our new wire harness product has shown strong sales this quarter ever since it was introduced in the market, mainly driven by newly acquired business from various existing OEMs. Wire harness business alone grew at 122% year-on-year in FY21. The industrial switchgear division's EBITDA margin percentage stood at 12.6% in Q4 and 14.6% for FY21. Wire and cable division contributed 52.5% in this quarter and 52.8% for the full financial year FY21 as against 47% in the last full year. There has been overall increase in demand across all sectors for wire and cable. Price increase coupled with growth in volumes led to a 63% year-on-year revenue growth in this division during Q4. This division's EBITDA stood at 6.3% in Q4 and 7.7% for full year FY21. The building products division has contributed 6.2% this quarter and 5.4% in FY21. This business is the only B2C business that we have. Consumer sentiment in the real estate market was relatively muted until now, but we are seeing signs of gradual recovery from this quarter. We expect the trend to improve in the next quarter, which will help us increase our contribution from this segment to the overall revenues. The fourth is the energy management division, contributing 0.5% to revenues in FY21. During the quarter, we have not received any new orders from the government as there were no tenders issued during this period. We are hopeful that in the coming quarters we'll be able to back some projects once the government starts to issue tenders. On the export front, barring temporary fluctuations due to lockdowns, we are seeing steady growth, especially from the US and the European markets. Exports to Americas grew 21.2% and 40.1% in this quarter and full year respectively. Exports to the Middle East and Africa grew 200% year-on-year in this quarter. For the quarter as well as the full year, the export share in the revenue is at 20% as against 18% last year. We also see very strong demand coming in from US and Europe as well as other domestic OEMs. With Q4 being a very good quarter on sales, we expect to maintain the momentum this financial year too. However, the second wave of the pandemic is impacting the logistics and business operations across India. with various regions having partial lockdowns. The situation still remains fluid and uncertain, especially in the domestic market. Here again, we expect things to be under control from Q2 onwards. Our aim is to maintain margins and focus on our working capital cycle and remain competitive to capitalize on the opportunities arising in the future. In the long term, based on the recent budget benefiting the infra sector, we expect CapEx to increase and thereby spur demand for all our products across various industry sectors. Also, in addition to strengthening the revenue drivers, improving our ROCE and working capital cycle is our core strategy. On the whole, we remain focused on our agenda to deliver consistent, profitable, volume-led growth on a sustainable basis. I thank all the stakeholders of Salzer Electronics for their continued support and faith in our company. This is all from our side. I would once again like to thank every one of you for your time and attention. We can now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudhir Bheda from Right Time Consultancy. Please go ahead.
Yeah, good morning, sir. And congrats for good top line growth in Q4 particularly. But sir, disappointment is coming from 2 quarters. Like one, are we sacrificing our margin to capture the business? Because if we study the peer companies, their margins are not affected in Q4. And second disappointment comes from the poor operating cash flow, sir. Because of high receivable, our cash flow from the operation has gone down considerably. So what is your view on that? That is number 1 question. And sir, second question is, we are kind of run rate of 200 crore. We have made some 200 crores of sales in Q4. So barring the first quarter, those kind of run rate will continue in the current year, and margin guidance for the FY22 if you can give, because constantly we are seeing that our margins are not coming up to the level of 13-14%. So your guidance for this. So these are the 2-3 questions.
Sir, you're right. I think our Q4 sales run rate was very good. There are a couple of reasons for that. One, there was real volume growth in the switchgear business, which grew around 27% year on year. And on the wire and cable, I think we grew around 63%, but I would say out of that around 30-35% is mainly because of the price increase. So real volume growth will be around 25%. So that's one of the reasons that we had a very high growth in that. Yes. So barring that, I would say Q4 is normally a very good quarter for our industry. So we may not expect the same kind of a run rate of 190 crores for the next 3 quarters or 4 quarters, but definitely at least 80 to 90% of this for the first 3 quarters, and then growth from there again on the Q4 for FY21. So that's what we expect for FY22. On the margin front, there are a couple of things that we have to see. One, extremely high contribution, more than 52-53% contribution from wire and cable, which has actually brought down or pulled down the blended margins from around 10.5, 11 to 8.5. That is one reason. Secondly, the EBITDA margin of switchgear industry itself has dropped for us this quarter from close to around 15.5 to around 13%. So that's a 2% drop in Q4 on EBITDA margins for industrial switchgear projects business. So combined, this has actually pulled our EBITDA margins down. though the absolute numbers, if you see, is around 16.5 crores compared to 17 in Q3. You may be right. I think some businesses, some peers would have not reduced the EBITDA margins. I'm not sure how that's possible because across the board, all raw materials have increased between 10 and 40 or 50% price starting September 2020 or October 2020. This price increase started fluctuating, going up every month.
Yes,
We never
particularly
thought it is
copper.
going to. Yeah, I mean, at least copper we were able to pass on the wire and cable division with a very slight lag of 15 days. We were able to pass on the price increase in wire and cable. But for all other materials in industrial switchgear division, the passing on can happen only on a contract basis or at a time. So there is always a lag of 1 or 2 months before we pass on the price increase. So since the price increase was consistently happening since October, November until March, so we already did 2 price increases in last financial year by about 5% and 7%, 5% and 5%. We have again done a price increase in June. So with all these price increases, we have covered the entire rise in raw material prices. But there is always a lag. So that is the reason that you see a drop in margin for the industrial switchgear division. I am hopeful that in Q1 FY22 and Q2 FY22, we will be back to between 15 and 16% EBITDA margin in switchgears and 8.5% in wire and cable division, which will again take us back to around 11.5-12% levels.
Great. If you can clock 12% margin, it would be a good news for investors, right?
And on the operations side, you are right. I think our working capital cycle has again declined compared to what it was around 150, 155 days last year to around 170. Main reason I think is one is the very high sale that happened in the last quarter of last year, which has actually pushed up our debtors by at least 10-15 days. And also because of various COVID situation, we had to do a little more stocking in the inventory. So that is actually pushed our inventories up. But I'm hopeful and confident that we will be able to manage this and bring this down in the coming quarters.
Oh, great, sir. Thanks for the opportunity, sir, and all the.
Thank you. The next question is from the line of Chirag Patel from Adinath Shares. Please go ahead.
Congratulations on back to the normal kind of numbers receiving in this uncertain scenario. I have few questions, sir. Like in Q4, the numbers which we posted, excluding the export business, what kind of numbers we received due to volume? I mean bifurcation between volume and value terms, if you can provide.
On the industrial switchgear business, we only had a 5% price increase.
Okay.
So rest is we had a 26% growth. So we can say that we had a volume growth of 20%. And similarly, wire and cable, we had a 63% growth. But if we leave apart the price increase, we would have still had a volume growth of around 25%.
Okay. So, which industries mainly given orders in this both the two products at domestic level, like wire and cable, and industry, other than real estate, I'm asking?
I think our export business, if you see, as in this quarter has also grown, doubled. I would say 50% growth we have seen. We had an export revenue of 38 crores in this Q4, as against last year's Q4 of around 24 crores. So the growth has come from exports as well as local domestic OEMs demand. As we have seen increase in demand from the domestic OEMs.
Okay, sir. My second question is, what was utilization in Q4 this financial year?
Around close to 70, between 70 and 75% in all facilities.
Okay. And what generally we do utilization in normal scenario?
Wire and cable we can go up to 90%, and all other industries we can go up to around 80%.
Okay. So, like when we expect this, we will reach to this normal level again? I mean, from which quarter we expecting normal to go back in our production?
I was very hopeful that from Q3, Q4 onwards it was normal continuing and we will continue the same trend. But unfortunately, from May 10th onwards, we are under lockdown here in Tamil Nadu. And I think the rest of the country was from April, May. Looking at it from now, I think from Q2 we will see some normalization.
Yes, sir. The third question is, as you mentioned in your remark that in last 6 months you done price increase is 2 times, right? So
it is once in Q3 and once in Q4.
Okay, sir. So coming to that, is there any further scope to increase price in coming
quarters? We have again done a small increase in June.
Okay. So for industrial switch wire and cable?
For industrial switch cable.
Okay. And as you mentioned that the 15 days lag is there in pass to customer for copper. So and you also guiding that we will reach to the normal kind of margin from Q2 somewhere. So for Q1, what kind of margin one should expect? Because the asset utilization definitely will be down due to plant shut and all. So
Q1 I think is a little uncertain because almost 45 days have been disrupted because of closure across India and also here in the manufacturing facility. But I'm definitely hopeful that it will be definitely better than much better than Q1 of FY21 where we had a major lockdown. So I think on the top line we should be back to almost normal, but may not be like Q4 of FY21, but we will definitely be below that, but it will be as good as Q2 of last year or previous to that.
Okay. I have a few more questions. I will come back to Q. Thank you.
Sure.
Thank you. The next question is from the line of Vijay Sarda, an individual investor. Please go ahead.
Hi.
Hear you very
Rajesh.
clearly.
Yeah, good morning, Mr.
Hi.
Vijay.
Hi, Rajesh. Come good set of numbers. Rajesh, just wanted to understand two things on a broader perspective. Means given the volatility in copper prices, as you rightly said, you won't be in a position to pass on that. You always been able to pass on with the lag. Now with copper now correcting, so will that be a reverse? So we will have a benefit of that coming to us, and the price decrease, what has to happen has happened with lag. So will that be a positive once if we see copper price falling from here on? First thing. And second thing, what is the mix we need to consider when we are looking at a broader perspective in terms of cable and wire? Because wire, as you rightly said, is a single digit margin, higher single digit business for us in terms of margin, whereas switchgear is mid-teens kind of margin for us. So what is the mix that we need to consider going forward? Because last quarter it got skewed much higher on the side of wires because of the price increase and all that. So that is the second thing. Third, I just wanted to understand in the entire of our business, it's more B2B is how much as a percentage of sales. So except for modular switches, I think most of the business is B2B, or in switchgear we do some B2C also.
Okay. For your first question, I think I was about to tell that, but then you brought up the right point. On the price increase of raw material price increase, normally I think on copper, on wire and cable, we pass it on every fortnight. So that's whatever price changes, we keep passing it on. If the price starts declining, again we have to pass it on. The same 15-day lag, I think it will keep going like that. So we will not be able to gain much on the wire and cable industry, where we will be only able to gain margins by operational efficiency and increased volumes. But coming to the industrial switchgear division, whatever price increase, including copper or plastics, steel, silver, whatever price increase, we have passed on now. Whatever is increasing, we have passed on. But as you said, when it starts declining, here I think we will have an edge of getting a little bit higher margin, because we will not reduce to the same extent as the raw materials going to reduce in future. I expect the raw material prices to stabilize. It's already stabilized. It will start declining, hopefully after Q2 of this year is what we all expect in the industry. And if it happens, we will definitely have to start passing on the benefit, but not to the same extent of the reduction in material. So definitely, as you have rightly pointed out, there will be possibility of increase in the margins when the prices starts going down. Second, on the mix of industrial switchgear business and wire and cable business, we are right now, we have been on an average at 45%, but this last 2 quarters have been very different because of the substantial price increase of copper. So when copper prices increase, at the same volume, our value of wire and cable business goes up and the share of business actually goes up. So that is how it has increased the share of business. If at copper remaining at the same level, I think the share of business we have to see is between 50 and 42, 43%. That is how we have to see this share. But we, from the company's point of view, we don't really look at it that way. Whatever be the share of business between wire and cable and industrial switchgear, we are focusing on how to maintain a 16% EBITDA on the industrial switchgear division and an 8 to 9% EBITDA on the wire and cable business, and continue to grow on both divisions at 20-25% year on year. If we are able to do that, I think on the absolute numbers side, we will be able to easily grow the EBITDA numbers by 20%.
That,
Vijay, I have answered your question, sir.
Yeah. How is the B2B and B2C mix?
On the B2C, as you said, I think the building product is one product we have B2C. On the switchgears, we have very little B2C, not a very major portion.
So basically 95% plus business is B2B only.
B2B, yeah, correct.
Okay. And last thing on KC, how is the numbers and how is the overall KC? Because I think KC performance has also dragged the performance on a consolidated basis, if I consider, because where the EBITDA percentage was lower compared to the overall average of our overall business.
KC, on the top line, it has been flat because the COVID impact in Maharashtra has been much worse last year. But on the top line, we have managed to do 23 crores as against 23.5 the previous year. On the profits, I think from previous year of 2 crores, it has declined to 1.1. So there is a decline of almost 1 crore in the profit before tax and also profit after tax. The main reason is, again, increase in RM cost. Otherwise, operationally, we have been able to reduce all costs, the employee cost, the finance cost, everything, other expenses, everything has been, we are able to cut down and do this. And if the lockdown, if the pandemic issues are over, I think cases will start growing at around, again, 20-25%.
Okay, great. Thanks a lot. Thank you, Rajesh. Yeah.
Thank you. The next question is from the line of Kiran Naik from Modi FinCap Private Limited. Please go ahead.
Thank you for giving me an opportunity. I have 2-3 questions. Why the promoter holding is below 40%? And secondly, no, only one question. Thank you.
Sir, I think the promoter holding has always been between 30 and 33%, 34%. So we promoters are looking at increasing the stake. We have been buying in the market the last financial year. However, there has been some change in shareholding in the recent past, so that is why you see a small decline. However, going forward in this financial year and next financial year, there is a intention to increase the promoter stake.
Okay, thank you, sir. Thank you. That's all.
Thank you. The next question is from the line of Rajkumar D from an individual investor. Please go ahead.
Yeah, good morning, sir. Can you hear me?
Morning. Not very clearly, but please go ahead.
Yes, we can hear you, but not very clear. So I would request you to come in the handset mode, please.
Yeah. Can you hear me now?
Yes, sir.
This is better. Thank you.
Yeah. Good morning, sir. Congrats for a good set of numbers. Of course, the top line has increased very well. Sir, I just have a couple of questions. The first one is on the revenue guidance. So you mentioned to the previous participant that the revenue will reduce to somewhere like 80% of your Q4 for the first 3 quarters, and then you'll see some growth in the Q4 of the upcoming year.
Yeah.
So is it fair to assume that your top line will be more or less similar to what you've done for the current year and with an EBITDA margin of about 11.5 to 12%?
I think on the top line, our guidance for FY22 will be, we are looking at a 20% growth from the current levels. And we can safely assume that our EBITDA margins will be between 11 and 11.5%.
Okay, sir. That's helpful. And secondly, sir, this KC acquisition, any plans of merging it with Salzer at some point?
As of now, there is no plans to merge KC in business.
Okay, sir. Thank you. All the very best.
Thank you. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. Continuing with the question related to KC, sir, what will be the fate? Will we be going in for a 100% subsidiary by the end of this year, or will that be postponed to the next financial year?
Sorry, say that again, sir, your question?
So for KC, will you make it a fully owned subsidiary by the end of this year, or will it be pushed to FY23?
It is already a subsidiary with Salzer holding 75%. I don't think we will be able to increase the stake as of beyond this because of the regulations. So this, so kind of, I would say it's a fully owned subsidiary already. If we make it 100% owned subsidiary, then we have to delist, and then that's a different decision that we have to take. I don't think there is any plans for it as of now.
Okay. Sir, in terms of the export orders, can you help us through what are the geographies where you are getting the orders from?
On the geography, okay, this full financial year, if you see, we have grown very well in the Americas. As I said, for full year, the US business has contributed around 24-25 crores, which is a 40% growth on year. And similarly, we have got a lot of new businesses from SEZs and EOUs in India, which has actually grown at 200% compared to last year. This is also a reason why our new businesses like three-phase transformer and wire harness is growing. I think that is the business that we are supplying to SEZs and EOUs, which we consider it as dollar billing and we consider it as exports. So these two areas are growing very well, but we see strong demand coming in from Europe also, because Europe was completely under lockdown in Q1 and Q2. However, after Q3, it started picking up, and we see good demand coming in from Europe also going forward.
So can you put a number? Last time I remember you said somewhere around $4 to 5 million is the export that we were looking at with a horizon of 2-3 years, of course. In the current scenario, does that still exist in terms of the order book?
For FY21, our total export revenues is at around 121 crore, compared to 97 in FY20. So we definitely see with the current trend, around 150 crore is what we are looking at for FY22.
Okay. So these orders are coming from Eaton, Dublin, Ireland, is it? Or from Australia and New Zealand?
Eaton is from US and from Australia, New Zealand, the different companies. The revenues are yet to start to flow in from Eaton and this Australia, New Zealand business. So Q2 will be the first quarter where we will be seeing revenues from these companies.
And sir, if I can mention the name, the old customers seem to be coming back, and we see that value is showing quite a lot of traction in the market in terms of the electric vehicles and auto vehicles that are there. So any contract that you would like to share in terms of numbers from earlier?
Getting a question, sir. This is regarding our business to electric automotive?
Yes.
I don't think we right now have any business that is related to electric vehicle as of now. We are still in the R&D stage.
Okay.
So our business is primarily focused on, other than electric vehicle, we supply to other automotive companies like Bosch and Valeo. These are the couple of automotive companies that we are into, and we supply to them.
So I just mentioned Valeo. Okay. In terms of the relay market and the orders from the government of India, which should be relieved, I guess, in times to come, would you like to share some data on that in terms of the ICF, RCF, or MCF?
Railway business has been very subdued in FY21 mainly because of the COVID. I think they've pushed all the orders that were given to us. They have not picked up any orders in FY21. So our business with railways was, I don't have the figures, but it's much less. I think it declined by more than 70-80% compared to the previous year. However, we see that all the demand is being pushed to FY22, and we expect FY22 to be a good year for railways.
Okay. So anything from the PLI scheme that is favoring us, or maybe from the modified EMC schemes?
No, sir. I don't think our products are covered under the PLI scheme.
And in terms of the telecom, if we had some relations with Jio and Bharti via Indus Power, so nothing that is coming through from that horizon as well.
We do supply. We continue to supply our products and components to telecom industries like Indus Towers, Jio, and various other tower companies, but they don't fall under the PLI.
Okay. And so, last question. In a previous conversations, you said that with the balancing machines, or in addition of around 1.5 to 2 crores, you could double the capacity from around 30 odd crore to 55 odd crore. So do you see the customers demanding more, and do you feel that this capex which you had mentioned in the past would be coming into existence now to push the revenue to the vision of around 1,000 crore in times to come?
We don't envisage any major capex in this financial year, also for next year, because we have done enough capex in the last few years, and we are now ready to scale up this business, whatever we are doing, 1,000 crores with only minimal maintenance capex for the next 2 years.
Okay, so I'll get back in the queue. Thank you.
Thank you. The next question is from the line of. Thank you. The next question is from the line of Sriram Rajaram from Ratnatraya Capital. Please go ahead.
Thank you for the opportunity. I have 2 questions. So first question is basically you sell to ABB, Siemens, and Honeywell. So what is the end output that's coming out of Honeywell, and what do you supply?
Honeywell actually manufactures a lot of products. I'm not sure what products they make. They also make a lot of sensors, panels, things like that. So what we do to them is only components that they use in their panels and in their products, and then they sell into the market.
So what exactly do you supply? We use the components used in panels. So is it?
We supply relays, general purpose relays to their panels. We supply wiring ducts to them. We supply wiring management systems to them.
Okay, that's helpful, sir. And secondly, you mentioned that our capacity utilization is already 70-75%. But you were talking about no major capex in the coming years, so I just want to get some sense on that.
Actually, the 70% capacity utilization in the wire and cable, we will be able to increase another 20% without doing any capex, because we can do a utilization of close to 90% in wire and cable, because it's a continuous process business. On the switchgear business, again, we can go up to around 82% capacity utilization. After that, as I said, with minimal capex, whatever maintenance capex we are doing, we will be able to add capacities to our switchgear business, which we have been doing traditionally as and when the demand picks up.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Neha Jain from Etika Wealth. Please go ahead.
Good afternoon, sir.
Good afternoon, ma'am.
So I have a couple of questions. First, could you throw some light on the future expectations from Energy Management Division?
Okay. Energy Management Division, as I have been saying, for us has been a government-dependent business. We secured some large orders 4 or 5 years ago, and we have successfully completed that, and we have handed it over to the corporation, and we are right now not having any order backlog. Apart from that, we secured some orders through EESL, which halfway through after implementation has actually stalled because of various internal issues of EESL. So, but for that, I think we don't have any further orders as of now. But we are constantly looking at seeing what other governments are doing and whether we can secure any order. But due to the last one and a half years pandemic that's been happening, most of the governments have not been going on to any new contracts or tenders in the energy management side, particularly on the street light side. So we are not foreseeing major business coming in for the energy management in FY22.
Okay. So my next question is regarding the building segment. So revenue from building segment has increased during the quarter as well as during the year. So is this due to the revival in the real estate market, and can we continue to see this trend?
Truly speaking, in the building electrical segment, we are a much smaller player, I would say. And our revenues have been flat compared to FY20 to FY21, because the first 2 quarters we were not doing very well and the markets were completely closed. And then it started picking up. Q4 was a very good quarter, so we were able to do almost 12 crores of revenues in Q4. Looking at Q4 and looking at the way the market's demand was there, we see definitely the demand coming back to the real estate sector, and projects coming back or started to work again. So hopefully FY22 in real estate will be good.
Okay. And my last question. Also, short-term as well as long-term borrowings have increased. So have we taken any new loans?
No, I think on the long-term borrowing, I think it has been almost flat. No, it has increased. I think what has happened is, I think the new LAN cable facility that we have installed, that term loan, whatever we have been availing, has come into the books in this financial year. And on the short term, it has increased because, as you see, the debtor days and the inventory days have gone up. So debts and inventories have both gone up. So that is why the short-term borrowings have shot up.
Okay. So that's it.
Which has actually come back to the same March 20 levels in the first quarter of this financial year.
Okay, sir. Thank you so much. That's it for now, and all the best.
Thank you. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. Thank you for the follow-up. So some questions which are related to the future. So in terms of the Salzer branded products which were for the export, if you can just take us through that, how is that part of the business doing?
Sir, say that again.
Salzer branded products for export.
On the export, there are different brands that we're doing. One, if you want the percentage share, then I don't have the figure, but
Okay.
We do OEM export. We do exports to Schneiders and the GEs and ABBs. That is one export business that we do, where everything goes on Salzer brand that get used in their products and gets sold.
Okay.
There is also other business that we do in various European markets that we brand for our distributors. There are large distributors in US and Europe who buy it in their brand and resell it in the market. But there are also smaller distributors in Middle East, in Africa, in Egypt, in East European countries where people buy in Salzer brand and resell. So if you want a breakup of this, then I don't have it right now, but
okay.
I can get it.
So these dealer distribution business that has started picking up on the export front as well, right?
Yes.
Okay. So second question is related to the patented products. By when can we expect these to start contributing to the revenues?
We already have one patented rotary switch that's been that we are selling for almost long time, 10-15 years. Actually, the patent itself is going to end. I think this year. So that's a long term that we already used. Then the rest of the products also are on different stages of, already in the sale at different levels. I don't know what answer you expect, but we are already selling some of the products that we applied for patent.
Okay.
And there are certain products that has not come into sale, but as a technology we have applied for patent.
Okay, good technology. And in terms of the PCB business, that is printed circuit boards, do you wish to venture into that segment also, or will we be happy with the core which we have right now?
No, we are not looking at EMC business. PCB business, we are not looking at it right now.
Okay, sir. Thank you. Thank you, sir.
Thank you. The next question is from the line of Krisha Shah, an individual investor. Please go ahead. Krisha Shah, your line has been unmuted. You may go ahead with your question, please. Krisha Shah, I would request you to please unmute yourself from your mobile and go ahead with your question.
Sorry. Good afternoon, sir. Congratulations on the good set of numbers. I have a couple of questions. Could you please throw some light on the outlook for the next year and what kind of growth can we expect for the financial year 2022?
We are definitely looking very optimistic for FY22. We see a 20% minimum growth on the top line, which means that we will be at around 710 to 720 crores on the top line, and with 11 to 11.5% EBITDA is what we are looking at for FY22.
Okay. And are there any new clients lined up in the domestic or overseas market?
There are definitely new clients. Constantly we are lining up both domestic and export, talking to various people. As I have already mentioned in my previous calls, we already secured a few clients on Australia, New Zealand, and also in US, with whom we are developing certain products, which all will be in the final stage, which is already in the final stages, which we will start seeing revenues from Q2 of this financial year.
Okay, and my next question is regarding the building division. So what is going to be the targeted share of revenue from that division, and also what is the level of margin that we can expect from this business?
We are looking at least 8 to 10% revenue share from this business, currently at around 5%. So we're looking at around 8 to 10% the next year with 10 to 12% EBITDA margin.
Okay. Thank you so much for the opportunity. Good luck for the future.
Yeah.
Thank you. The next question is from the line of Ankit, an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon, sir.
Yeah, I have a couple of questions, sir. Sir, if you can see the switchgear division decline, but wire harness shown the good demand. So how do you see this business in the coming quarter as far as the retail market and domestic dealer is concerned?
Actually, we have almost had a flat growth in industrial switchgear business. It is a flat business only because the first quarter we had a negative of almost 50%. So that actually pulled the industrial switchgear in the full year performance. Otherwise, for the second half, the industrial switchgear business actually was growing at around 20-26%. And the wire harness business actually grew at a much higher pace because it's a very potential product. We actually secured some new orders from our existing OEMs. So that's the reason that that business has been growing, has doubled this year. Going forward, we see at least 25-30% growth in the wire harness business, and again a 20-25% in the switchgear business.
Okay. Sir, can we see the similar demand in the wires and cable division? And what are your estimate with respect to the revenue split?
I think in Q4, as I already mentioned, the wire and cable grew at 60%. That's mainly because we had a price increase of 35% and a 25% volume growth. So we will continue to see between 15 and 20% volume growth in wire and cable segment. And at this price levels or copper price levels, we should expect 50% revenue share from wire and cable and 42-43% from the switchgear division.
Okay. So, as you mentioned, the real estate is showing the sign of recovery. So, in our building division, do we cater to the same client or targeting the new client also?
We normally, when we do business in the real estate business, once we get a client, I think we continue to do business with the same client for a long time. At the same time, we also go and secure new clients. That's where we get the growth. But unfortunately, in the last 1 year, we were not able to secure any new clients. So we are constantly looking at getting new clients so that we start growing. So that can happen only when the sector reopens fully and functions at a full capacity. Hopefully that starts happening in this quarter, from this quarter onwards.
Okay. So my last question, how do you see the demand from micro small industries in the coming quarters?
So far, it's been very subdued because they have been closed in many areas. I think industrial switchgear business that we do to the electrical dealers actually goes into MSMEs. When MSME starts functioning, they start procuring the products, components from the dealers and the sub-dealers. That is when we see our demand going up to the dealer business. So far, it has been very subdued, and we hope that picks up and complements our growth this year. In my expectation, I think it will be Q2 before things normalizes if the pandemic starts slowing down.
Okay. That's from my side, sir. Thank you.
Thank you. The next question is from the line of Chirag Patel from Adinat Shares. Please go ahead.
Hello.
Yes, sir.
Sir, in year 2017, somewhere we gave a guidance of 1,000 crore turnover. So I understand that post that the economies were also in the slump mode, followed by GST and slowdown in real estate and other subsectors of economy. So is there any further guidance on that front that any year you keep in mind that we want to achieve this turnover in this next
Actually
year?
speaking, FY21-22 would have been our year to reach that milestone. But unfortunately, in the last last year is gone, and even year before that, the economy was not great.
Yes.
So we expect if everything goes well in FY22, we should be close to around 720-725 crores on a pessimistic scale. Optimistic scale, I think we should be at around 750. So I think FY23-24 is what we should be looking at, a 1,000 crore target.
Okay. And sir, that FY23 and FY24 which you given just now, is it more driven by the export business you expecting or domestic?
It will be a combination of growth from all sectors, both from export as well as domestic.
Okay. Best of luck. Thank you.
Thank you. The next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
So one last question for the quarter under review. So if there was no COVID and considering that we had a normal scenario, normal world, what would have been your targeted turnover for this year?
We should have been at least at around 670 crores.
Okay, sir. Thank you, sir. Thanks a lot. Thank you.
Thank you. The next question is from the line of Rajkumar B, an individual investor. Please go ahead.
Yeah, sir, thanks for the follow-up. Just one clarification. The 720 crores guidance that you gave, that is for the standalone revenue numbers, right? Not the consolidated.
All the figures that I was talking about is standalone figures.
Yeah. And so the second question is, any chance to optimize your finance cost because it's almost 70% of your net profit? Is there a way you could dollarize your debt or something like that? And you can negotiate.
The banks for reduced rate of interest. We have already converted a lot of finances to TCFC, and then the rates are down. Apart from that, I think we have to be operationally efficient to bring the debt down so that our interest cost goes down. I think that is the next step for which we have to bring our debtors and inventory days down.
So any guidance you can give for this year, this 21 crore number, do you expect the number to come down or it will stay flat?
I expect that to stay flat at least for this year.
Okay, sir. Thank you.
Thank you. The next question is from the line of Chirag Patel from Adinat Shares. Please go ahead.
Sir, just one clarification I required. Like as you mentioned, you give guidance for standalone entity, right? So for KC, you answered to someone in previous question that you are expecting a growth of 15 to 20%. Is my understanding correct for KC industry?
Actually, KC should be growing at 25%, sir.
Okay. So did we introduce any product in that? Because when we acquired this entity, they have only one product in which they were like this switch product.
We have already started selling some of KC's products in our channel, and we have started selling some of our products in KC's channel. We already started doing that.
Okay. So this KC industry is participating in export business or it is just in domestic?
Only domestic, sir. 99% domestic.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Rajesh Doraiswamy for closing comments.
So I once again thank you all for your time and consideration and the interest that you're showing on Salzer. Looking forward to interacting with you again for the next quarter's call. Thank you.
Thank you. On behalf of Salzer Electronics Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.